us today. My name is Melissa Armo with the Stock Swoosh, and today's presentation is going to be about the topic risk a little and earn a lot. So just sit back and relax. I'm going to start the presentation. At the end, if anyone is interested, I can go over some live plays that happened today and yesterday, and we can do that at the end of the presentation. After questions, we can go into my educational room. So stick around if you're interested in that at the end of the presentation this evening. So let's get started. The topic is risk a little and earn a lot. Can everyone see my pointer here? Okay. This is all about innovation. Everything that I have created in the course that I teach is innovative. And I consider it innovative because at the time when I was teaching myself to trade, I wanted to find a way, me myself, to risk a little bit of money and make a lot. So I worked hard on trying to find a way to do that. And it's all about innovation. When you're making progress in your trading, you have to learn to be innovative, or you can learn it from someone else. You see this fish here, he's in this light bulb, okay? We have no idea how he got in there, and yet he's in there. Clearly he made it in there. He's living, he's breathing, he's swimming around. We don't know how he got in there. Somehow, somebody figured out a way to get him in this light bulb, and it was very innovative. So, innovation is possible on any field, anything you endeavor to do. Because it was Columbus Day the other day, I thought, well, maybe we should talk about Christopher Columbus. Christopher Columbus was a pioneer of innovation. There's many pioneers of innovation. Christopher Columbus sailed in 1492. It's 2012. People have been innovators and pioneers of innovation for hundreds and hundreds of years, and it's not going to stop. So if you're a little bit amazed at the information I'm going to discuss with you today, I want you to stop and think, hey, you know, this isn't anything new. Innovation isn't anything new. People have been doing it for hundreds and hundreds of years. All you have to do is open up your mind to the possibility, and that will help you to be more innovative in your own trading and in your own life and ideas to make progress. I have a passion for trading, I have a passion for charts, and I have a passion for stocks, and that's the reason that I created everything that I do. It drives me to teach, it drives me to trade. There's a woman playing the violin. Clearly she's passionate about her craft as well. This is an example of a stock. This is a 1-minute chart of EXPR. It happened back in August. This is a perfect example of my passion for precision. The entry on this trade was extremely difficult. It was a gap down. It was a short. It was a very good gap down. The entry was tough. It was really, really tough. And it takes precision sometimes to get things right when you're trading, when things don't set up exactly perfect. The entry in this stock was right here. After this crazy rally up here, a lot of people probably would not have taken this trade. I had 100% conviction in the gap. And I took it with a dinky, tiny, tiny little stop. The stop was right over there. Why? Because it was a good gap, and I knew it. Again, it goes back to precision. And that's the whole crux of everything we're going to discuss today. The whole idea of innovation is something new or different. It's an introduction of new things or methods. And when you have a passion for something, it can overlap itself and continue and help you grow and be more innovative. What does precision really mean? Precision is the state or quality of being precise. It means accuracy, exactness. These things are extremely important. It is mechanical or scientific exactness. It is strictness, punctiliousness, and mathematics, the degree to which the correctness of a quantity is expressed. Mathematics and science drive the trading of stocks. I firmly 100% believe that. It is all based on science and mathematics. So why is precision important in your trading? And how can it make the difference? And how big of a difference can it make? And will you do okay without it? This is the big question I want you to think about tonight. I know a lot of people that trade, and they don't trade with precision. They use huge, big stops. They just want to get in something. They get dinged out. They get back in. They get dinged out. They may take 3 stops before something even works, and all their stops were big, and they're down money before the thing even goes. There's no precision to what they're doing at all, and they never stop and think twice that maybe there was a different way to do it. And that's the whole want you to stop and think, maybe there's a different way to do this. Maybe precision is actually really important. It is important. It can make the difference between you having a great trade and making a little bit of money or making a lot. It can make the difference between you getting stopped out in something twice before you make money in it, or it can make the difference between you immediately getting in something, taking nice size, and being out money as soon as you get in it. That's the ideal scenario. That's how I love to trade. There's nothing better than getting up in the morning, you take a trade, and you're up money immediately. There's nothing better than that feeling, and especially when it happens in the first 15 minutes of the day. So the big difference it can make in your trading is you can start to become more profitable. And as you're learning and growing and getting better as a trader, that's going to make the difference because you're still going to have some negative days. And then when you have some really nice big days, it's going to help you weather the down days. It's going to help your confidence, and then you're going to start to become more profitable at the end of the month. You're going to have more money. Even if you end up losing the same amount as far as number of days, if your up days can be bigger, it's going to make a huge difference in your P&L when you're trading. And that's what matters, the results. I teach a class, it's called the Golden Gap course, and everything I do is based on this. The Golden Gap course teaches a 26-point rating system to find the best gap to play each day. This 2-day seminar also teaches 6 different plays. And each play teaches how to enter and exit a gap trade with precision. This is the most important part, to find the good gap and then to enter it with precision. The play is important because that is how you make money. That is how you make money. You have to find something good to play, and that's how I came up with a whole rating system that I teach in my class. Because I was taking trades willy-nilly when I first started out, and I learned lots of different gaps and lots of different strategies, and they were not all working. And the whole thing I'm going to teach you today does not work in every single strategy. Tiny stops work with very good gaps, and they work to your utter disbelief. I have friends of mine, I show them what I do, I tell them to do something during the day, they do it with a 5-cent stop or a 10-cent stop, and it's a $40, $50 stock, or stock like Baidu, I can get in it with a 35-cent stop, and they say, I would never have taken that play, Melissa. I would never have taken a 30-cent stop from Baidu on a 1-minute chart, but wow, it's worked. And we're going to look at that from yesterday. If you sign up to take the Golden Gap course that I teach, you will learn how to trade with precision. Is this important? Yes, it is important. Why? If you want to be successful, precision counts. If you want to have an edge in your trading, precision counts. Why? Because a lot of people don't. They do not. They would rather take the safer, in their mind, they think it's safe. They think it's safe to take a big stop. It's safer for them to trade on a bigger time frame, 15-minute chart, 5-minute chart. They want to do safe. No, that isn't the answer. Accuracy, precision is the answer. Having a methodology that makes sense, that has a reason for what you're doing. When you realize that this is possible, your whole trading world is going to change. Your whole trading world is going to change when you realize this is possible. And that's the point I was making about innovation and Christopher Columbus, because things that you might not think are possible are possible. And that's what I want you to walk away with today. If you want to make a lot of money with a little risk, precision counts. And even people that have tons and tons of money want to make a lot risking less. So it doesn't matter. It doesn't matter if you're rich. It doesn't matter if you're poor. Would you rather risk less and make more? Sure, of course. Yes, definitely. If I had $1 million in the bank and somebody said to me, Melissa, I can take a small percentage of that money and quadruple it, would I take that person's advice, or would I take the person's advice that says, I'm going to do this, and I'm going to do this, and I'm only going to make 2 to 1 times the amount of your money? Are you okay with that, Melissa? And you're going to have to give me more than this other person. What are you going to do? I want the person that knows what they're doing so precisely and so accurately that they can do it correctly, risking less than more. The Golden Gap is the play that you're looking for to take these trades. You're going to get up in the morning, you're going to rate the stock with the 26 points that I teach, and you're going to find a good gap. And then when you get in the gap, you're going to take a play with precision and a tiny stop. If you know how to trade with precision, it is possible to risk a little and make a lot. Precision trading will give you an incredible risk-to-reward ratio. Do you want to make 2 to 3 times the amount you risk? Or do you want to make 5 to 10? It is all about finding the golden gap. Most of the stock moves that provide players with a little risk and a lot of profits happen from stocks that gap. They just have great momentum moves. And there are many stocks that gap, but only good gaps can be played in this fashion. I have to be very, very clear about that. This is not something you can do in every single gap that happens in the market. This is good ones only. It is essential to find the best gap to play, and it's called the golden gap. The golden gap course teaches a 26-point rating system to find this golden gap to play every day. So here we're going to get into the examples. I just updated this chart today. This gap, and I'm going to talk about, happened over here. Look at this beautiful continuation move that this thing had over the last couple days. And this is an example of, the fact is, we're going to go over this gap right here. This is the gap, and I'm going to show you the example of how to play it. But look at this thing. This was the start of this move. This was a good gap. How did I know it? I rated it by the 26 points, number 1. And number 2, this proved that it was fabulous. Look at the drop that this thing has. Now, the market's helped us over the last couple of days, granted, but it doesn't really matter. This first move here that happened was the igniting move for this whole thing down. Okay, it looks like it might hold itself here, but it was a beautiful gap. So, HPY was a stock, and it's a 1-minute chart, and this is how you do it. You get up in the morning, you rate the gap, you say, yeah, I like this one. Let's go back. Yes, I'm going to play this thing today. I'm going to watch it. I'm going to stalk it. I have 100% conviction it's going to work. Now, what do? I watch it. It opens. Boom. Opens. Shows me some weakness. Shows me some weakness. I'm not in it yet. I'm not in this play. I'm not doing anything. I'm just watching it. I'm waiting for it to set up itself. So then I get a little tiny rally here. It's not much, but it's something. And as I'm watching this, I'm seeing that it cannot even get over half this move here. Do you see this? So it opened and dropped. Can't even get over half this move here. I'm okay with that. I don't need a big rally into this thing. Why? Because the gap down wasn't that big. The gap down wasn't that big, so I prefer to see something just continuing to prove its weakness to me. Got the drop when it opened. Topping tail, red bar, selling. I got a couple little people here, and it's holding this area really nicely. So the entry is here, right here, and it stops over this bar here. Not over here, here. Now, how do I know it's going to hold that? Because it's a good gap. Because I invented the golden gap system, and I rated the gap, and I know that this thing is perfect, and it's going to darn well hold that thing. So, here's the entry. Entry time is 9:35. The price to enter is $30.96. The stop is over $31.07. The risk is 11 cents. 11 cents on a $31 stock is a small, tiny stop. That is a small stop. You can get smaller stops in certain things, but the way this is set up, you take it as it comes. So, if you took 1,500 shares, you risked $165. And I'm going to show you where the exit was. You have to take the exit out of the first target. The first target was $30. You would have made $1,440 on this. What does that mean? It means almost 9 times profit on the amount that you risk. 8.7 times profit the amount that you risk. I never take a trade that I'm only going to make 1 to 2, 2 to 3 on. Everything I do, I'm looking to get 4 plus. Really preferably 6, 7, 8, 10 or more. That's what my whole goal is. So we risked $165 and we made $1,440 on this play. If you don't want to risk $165, slice it in half, risk even less, take 750 shares, okay, then you're risking half of this only, 80-some bucks risk. Your stop still has to be 11 cents. You would have made less than $14.40, but you still would have made over 700 bucks. That's nice. That's a nice play. That's a nice play in 6 minutes. Now let's go back and look at this. Here was the entry. Boop, gets the drop. Now this actually dinged under $30 here, but you have to take it out when it falls into the target. You have a nice drop. It's into reversal time. You need to book these monies. Why? I'm going to show you in a minute. The point is, you just made $1,440, or almost 9 times the amount of the risk. That's a great risk-to-reward ratio. If you could get up every morning money and take a trade like that, would you? Of course you would. Of course you would. And you'd be running free. So it's important to make sure you book the money into these drops. For all you knew, $30 was the whole target on the day on this. Let's go back and look at it. $30 was here. You had no idea. Remember, we were trading in real time here. We have no idea it's going to do this. You don't know. You have to book it. You take it off at $30. Okay, so you're with me so far. We're at $1,440. We're happy. We got two choices. We can quit for the day, turn our computer off and say, I'm taking my money and I'm done. I'm going to the gym. Fine. Or you can try something else. And this is what I'm going to show you next. So, to risk a little and earn a lot, step 1 is you find the golden gap. Step 2 is to risk a little and earn a lot by taking one good play with precision. That's what we just did. We took one really good play with precision. Now, step 3 is you take a second play that sets up again with precision. You use some of the play number 1 profit to make even more on play number 2. This is called risking a little and earning a whole lot. And this is very important. When you get a good gap, or what I call a golden gap, they can have beautiful, fabulous momentum moves. They can be done by 9:45, 10 o'clock, 10:15, 10:30, or they can run all day. You don't know that when you're getting into play. You have no idea. So that's why you've got to book that money into the drop when you hit the first target. The whole idea is, though, if you want to make even more, so first we made almost 9 times the amount with 8.7. If you want to make even more than that, you've got money to play with on the day. I do not want you to risk all the money you made. That would be a terrible thing to do. Don't do it. I used to do that when I first started doing this, and it's devastating to you mentally, so please don't do that. Take an amount that you want to risk of that $1,440 and say, I'm going to risk this next amount. I'm going to use it to make even more. And here's what you do. You take the second play. I'm going to show you where it was in a minute. This is risking a little and earning a whole lot. The second play was you entered at $30.26. The stop was over $30.38. It was 12 cents. This is still a very tiny stop. Okay, it's almost 10 o'clock now. That's still early enough in the morning to be trading with this type of precision. 7,000 shares at a 12-cent stop would be risking $840. Now, we already have the $1,440. Minus the $840, we would still be up $600, booked solid on the day. We take this play, we're in it. We can still stop if this trade for some reason would not continue, if $30 was the end of it, if it set up and failed in the second one, we still have $600 on the day. That's a day. That's a decent day. That's $12 grand a month if you're doing that every day when you're trading. That's nothing to sneeze at. So just be aware that when you make the decision to how much you're going to risk next, you're okay with that. You exit at the target. Actually, the next target was $29. It didn't get there. I'll go over that with you in a minute. But you have to take it off then once it bounces. Plus, you're up a crazy amount. The profit in this trade then was $5,530. This is 6.5 times the amount of profit that you risked from the play. We risked $840. Now we made 6.5 times the amount. But totally, we were up on the day now is almost $7,000. Why? Because the first play, we still had that money. The second play worked, we made this. And then in total, we made $6,970. And what did we do? The whole morning started out by risking $165. Let's go back. So we took this play, we get the drop, we're out at $30. We make a decision, yeah, we really love this gap. We think it's going to go bigger. We like it to $29. Let's see what happens. So you're watching, you're waiting for it to do its thing, okay? You're waiting. This is not concerning here. This is not buying. I have to be very clear about this. This is people covering a short. This is just a rally. This isn't anything to be scared about. If this had shot up like a rocket, I'd be concerned that this was really bouncing off of a real target, that it was going to reverse itself. That's not what happened. And the fact that it didn't act like that gives me more conviction as I'm sitting here trying to make a decision if I'm going to take a second play, if I'm going to risk any of that initial monies. As I'm sitting here trying to decide, Melissa, what should I do? I'm getting more conviction. I'm getting more conviction that, yeah, I'm definitely going to get back in this thing when it sets up. Why? Because it's still early exact same number over here. And when things do stuff like that, I say, woo, conviction, 100%. I already liked the gap. I already rated the gap. It rated high, showed me weakness all morning. I'm up money. What do I have to lose? Worst case scenario, I made $600 today. I'll take it. So in the meantime, I'm deciding to get back in this. Why? Because this is telling me it's going to work. You have to listen to what the stock is telling you. This is where people kind of get chopped around, okay? They say to themselves, I know that this is going to work, and I'm going to go into this, and this is going to work. Yes, have the conviction. But if the stock does something to tell you that it's not working, don't fight with it. And in the same regard, if the stock is telling you, I'm looking so good today, Melissa, if you don't get back in me, you're crazy. So when the stock is telling you it looks good, you need to be ready to retake it. And this is how you're going to take a small account and turn it into a big one. This is how you're going to risk $165 and make almost $7,000. And then you're going. Then you're moving ahead. Then you're doing this every time you get a good gap. And you just move forward. So here's the next entry right here. Right here, 9:55 into 10 o'clock. This was your entry right here. The stop has to be over this topping tail. It can't be any higher, but it must be there. This is still a tiny stop. It's 12 cents. And what happens? You get a drop. It doesn't go down to 29 bucks. I'm out of this thing. 1 penny over the previous bar here. When it does this, I'm out. I can't stay in this thing when I'm 40 cents away from my target, when I'm up that much money, and I'm going into another reversal time, which is 10:15. I don't want to suffer through a rally. I've got my nice drop here. I'm taking it out. If you want to suffer through a rally, go ahead, fine. Just know it may not get to the exact number you're trying to get it to. And after all, we're already up. We just chunked away more of our day. We can't get greedy at this point now. Hey, we gave it a move. As soon as it starts to flip, take it. If you didn't take it, this is what happened, and you see this is people getting out of their shorts, and then we get this rally up here. The stock still ended red on the day, but you gave back a lot of money if you suffered through this thing. So take it. And notice this thing right here. Look at this. Now, do you see what I mean by precision? This was an excellent gap. It held this exactly. You don't need to put the stop up here. And down here, as I'm waiting for this to go, I can't take it here. It's too soon. I can't take it here. It's too soon. It's rallying. It's too early after this drop. I have to wait. And as I'm waiting and trying to make up my mind if I'm going to retake this because I already made over $1,000 today, I decide that yes, I am. Why? Because this goes up here, and look at this thing. It's holding its weakness. This is crazy, crazy weak for me. And I love that. Shorting weakness is what I'm looking for. You buy strength and short weakness. And now here we go. We take it. And when this goes up and does here, it holds that to the penny. This is precision. This exists in the golden gap. This doesn't exist in, I don't think it exists in anything else. I'll just say that right now. I just don't. I know how to do many, many different strategies, and the reason I decided to do this whole thing was because I can do this. I can't do this with everything. And I want to do this. Why? Because this is how you take sides. And this is how you get to make some extra money. So in summary, you risked $165. At the end of the day, you earned 42 times the amount you initially risked. Earning 42 times the amount of your initial risk is earning a lot. And this opportunity exists when you know how to find the golden gap and play it with precision. It's all about the precision. Does everyone understand that? That is, you have got to get that right. You have got to get that right. You have to see this here to know I'm okay with getting in here and putting my stop here. I'm okay with taking this and putting my stop here because that's how you're going to do it, to press the button to get these kinds of sizes. And then because you got the size, you're up so much money when you get this drop, you're not hanging and clinging on here to try to squeeze every penny out of this or squeeze every penny out of this. You don't care about the 40 cents that it didn't get down to the target because you're up so much here. What are you going to do? You just take it. You just make the money. The whole idea about trading is when you get into a flow, you just do it, and you're not squeezing for every penny. You're already up on the day. You're doing everything right. Just let the money flow to you. Let the stock tell you what it wants to do. Let the money come to you. Don't start getting greedy. When you start getting greedy, then the market's going to whip you around. trade. Good gaps provide you with moves that have great potential for momentum. This is what we're playing. We're playing the momentum move in these gaps. And also multiple plays within that move, because when they work, they set up, they go. They set up, they go. The target's based on the chart, which is something that I teach in the class. I couldn't possibly teach that tonight. It would take too much time, but all this stuff I teach in my class. That is why the information in the Golden Gap course is so valuable, because the 26-point rating system helps you find the best stock to play each day. That is the most valuable thing in my class, because I'm pointing you in the right direction in the morning to narrow down what to look at. And the better you get at doing this, the easier it's going to be. And then you're going to have the faith and belief and conviction to start acting in this way and being innovative yourself, to take these plays, to just do it. And you know what? If you screw up on the second one, you already had the money that you made on the first one. So then you turn off the computer and you go home and you say, all right, I kept some of the money in the first one, and that's why it's important to do that as you practice and get good at this. So we're going to go over one more. This was a huge, huge, huge move. I had no idea this was going to do this on this day, but this just is another example how when things get momentum moves underneath them, they will just flush and go and go and go and go. And there's people that come in here, they try to buy these as climactic buys, which is insanity. It's just crazy. You do not want to be against the trend. Someone told me when I first started trading, the trend is your friend. And that was a simple little thing. I didn't make that up. Somebody told me that, and they were right. You have to get the bias right on these gaps. Whether you're doing long gaps or short gaps, I teach how to play bearish gaps, but you got to get the bias of the day right. Because when you're in something in the move of the momentum, you're going to make money. And when you're in something and you're against the momentum, you're not going to make money. It's going to be hard for you to make money. Even when you're trying to buy these things on a climactic bounce, you get stopped out 3 times before it bounces. And look at this. Where did it bounce? Here? This little dinky tail is where it bounced today? Come on. This is not worth it. You can get run over like a truck if you get in these things in the wrong direction. And so what happens is, the reason they end up going so crazy is, first of all, the big money is pushing it down. That's setting the tone for the day on the gap initially, which is what I'm using to rate it. Then people start to decide to buy it. I don't know, they decide to buy it here, they decide to buy it here, they decide to buy it here. Those shorts, those buys are getting stopped out, and then it's pushing them down even more because people are getting stopped out of the buy. How much time to determine? You mean in the morning? Well, I get up in the morning early. I get up at 6 o'clock in the morning. You don't have to do that, but I look at stuff the night before at 4 o'clock. I get up at 6 o'clock in the morning, and then I recheck the stuff from the night before, and then I look at the stuff in the morning. You don't have to do that. You do need to start working probably by 8 or 8:30 in the morning. You've got to give yourself at least an hour to look at some things, to rate them, to do the work. The more work you do in the morning before you trade, the better you're going to do. There's some days I'm up at 6 o'clock, but you know what? I'm done by 9:45. So it's worth it. And then I have the rest of the day to myself. And the more time I take to study these things and rate them and go through the system, the more conviction I have to do these kinds of things, to take the second play, because I have everything figured out. I have everything all figured out already, and I'm ready to go. I'm waiting for it to set up. I'm expecting it to work. I have conviction it's going to do it. And then when it does it and it tells me it's ready to go, I'm in. So here is the second play. This is SWKS. Again, this is a 1-minute chart. This is back in the end of September. Here was the entry in this one. Now, we watched it. We liked it. We rated the gap. It was good. What happened? Open. We got a huge top and tail. You can't play this. There's nothing to do here. There's no entry here. This is Whip City. But you're liking the fact that it opened and went boop and came right back in. So in real time, this opened and went shoot green and immediately came boom back right in and went red on itself. This is a good sign. It's a sign that, hey, I'm not going anywhere above this and I'm not going up. Okay? So then it goes down and it goes down and it goes down, and now it's settling itself down. You just got to wish this whole thing settles down. I don't want to be playing things that have tails like this. So you let it settle, 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 settle. It rallies and it holds itself, and look, this did exactly exactly like the other one. Exactly like the other one where it's holding half this price move here. See it? Again, showing me the weakness all over the place. So now I'm waiting for setup. The stop has to be over this topping tail right here. You're entering right here, and you get the drop. And actually, the target on this one was $27. Here's the play. The entry time was 9:40. The price was $27.85. The stop had to be over $27.98. It was a 13-cent stop. So on 1,500 shares, you risked $195. Again, if you don't want to do that, split it up in half. Only risk $750 and risk less than $100 then. I do not have the gap rating criteria in this presentation because that is what I teach in my class. It is a Golden Gap course. It's 2 full days. I do not give that information away for free. It is a paid seminar that I do, and it's 2 whole days. I couldn't even possibly talk about that in an hour. It takes 2 whole days to go over my whole system. But I'm pointing out here that the reason is to take the class is to get that system because it helps you find these gaps, and I teach you how to play these things in the class, mainly about reading the candlesticks with these entries. But I'm showing you some of that tonight. So the exit is at $27.10. It didn't get all the way down to $27. I'll go show you that in a minute. You get out, it's around $9.58. The profit you made on this is $1,125. How much is this? It's 5.7 times the profit in the amount you risk in just one play. Once again, it's more than 1, it's more than 2, it's more than 3. Now, this is the first play on this one. So let's go back. You entered here. You got the drop. That's okay, Kelly. We like this down to 27. There's no reason it shouldn't get to 27. Let's go back and look at this chart here. 27 is here. We're well underway. We're in this trade. You don't see anything here. There's no reason to think it's not going to get to 27. So when we get this little dinky rally here, we're watching, we're waiting. If it does something crazy, I'm out of it. It doesn't do anything crazy, though, and it holds itself here. So you lower your stop here, and you give it one more drop into 10 o'clock, which is the next reversal time. So we got a drop into 9:45, then we get another drop into 10. You've got to take it out here. When to take it out here, it gets the drop. As soon as it opens here and starts to show that it's not going to go 1 penny under this bar here and continue, 3 red bars down, which it doesn't, you're out. So it's 27.10 until you're out of this. It didn't really make it all the way down to 27 here. It does over here. We can't stay in it that long. I'm not suffering through this rally. And remember, the whole object is to make money with a little risk. We did it. And we made over $1,000, and we got close to our target. We're not being greedy. We got 10 cents away, take it. I'm not suffering through a rally for 10 cents. I'm not giving back $200 to make $200. I'm not giving back $300 to make $100. Get smart about where you're taking profits off. So we're out. Here we are. We have this money. What can we do? We can go to the gym and turn off the computer. Or we can say, hey, I still really like this gap. In fact, I love this gap. What am I going to do? I'm going to look to retake it. This is the 1-minute chart later. I didn't show this whole thing over here. The bottom line is this stock continued to show weakness all morning. You have to wait. After you get a drop like we had and you're up the money, you have to wait for the proper setup. Again, this is another play that I teach in the class. But I'm going to show you that it set itself up nicely. It proved it was weak all morning long since we exited the play at 10 o'clock. You have to sit and wait for it to do what it's supposed to do. When it does, you can determine how much you're going to risk on the second play, and the whole goal is to take some of the money from the first play and make even more. So we risked a little and made a lot initially. Now we're doing the same thing again, and we're saying, I want to make a whole lot today. I truly believe this has a huge target on it. I think it's going to go way past 27. In fact, I think it's going to go to 25. That's my next target. Let's go back and look at the main chart on that first. When this started falling here through this and started crushing through this 200, 25 had to be the target. Again, we don't know if this is going to happen, so this is our next target. Does everyone see this here? Okay, very clear. So we like it, and it's setting itself up. It keeps trying to go higher, and it can't. It keeps trying to go higher, and it can't. It keeps trying to go higher, and it can't, and then it starts facing off, and we're going to 12 o'clock. 12 o'clock is a major reversal time in the market. If you decide to play past the morning, you got to be aware of some of these major reversal times. Every 15 minutes is a reversal time, but really noon is a big one. So you're in right here, and you get the drop, and it drops through past into here. You have to take it off. It dings right under 25. It doesn't get there. It's within 2 pennies. You have to take it off. You have to take it off in here. You don't know what's going to do this. Here's the entry. 11.53. The price is over 27.19. The price is over 27.26. The entry is 27.19. The stop is 7 cents. So we got a better entry in this one than we did the other one. Why? Because the stock kept proving its weakness all day long. All morning long was proving its weakness for 2 hours. And during that time, I'm sitting here deciding how much am I going to risk. I'm up over $1,000. I have to keep something. I cannot risk all of that money and ruin my morning. I like to play, but I'm not going to be silly. I have to be smart. So I make the decision. Okay, I'm going to risk less than half. And I'm okay with that. Because you know what? If it doesn't work, I still am up $635 on the day, booked solid. Solid, solid. And even if you get taken out of your stop and wiggled and jiggled, I use hard stops, by the way. You're still going to be up. Nice day here, no matter what. You have to be comfortable taking sides, and you got to get good at them. And if you're not, you got to start to work at these things and just take it down and practice with less. But you got to build up to it. It's just the only way. It's the only way to do it. The way to make a lot of money trading is not trading for 8 hours straight, 5 days a week, 20 days a month like a maniac. It's just not the way to do it. The way to do it is this. Precision, a good gap, and an amazing entry. And it's possible. All of these things I'm using buying power of about 200,000. So if you have a prop account, you can do the math and figure it out. And if you don't want to take up to that, split it in half. These are still huge days. You can make several $1,000s even if you have an account with only 100,000 buying power, and you don't need a lot of money in a prop account to do that. If you have questions about that, you can email me later. But all of these are based on 200,000 in buying power. That's it. This isn't even $1 million in buying power. This isn't even 300,000. It's 200,000 and under all these examples. So let's get back to this. We exit into the drop. It doesn't get to 25. We're 3 cents away. It starts to bounce. We're out. The total profit on this is $15,120. This is with $200,000 in buying power. This is risking $195 on the first play of the day. This is making almost 31 times the amount of profit you risk, and you're up 16 grand and $245 from the initial 1125, which we kept, and then this extra money we made. This is into the drop. This isn't even past where it went, which I'm going to show you in a minute. Let's just go back. We took this for many, many reasons, but we took it deciding and making the decision that we were going to only take a $500, $490 risk. So that worst case scenario, this thing stopped out, we had money on the day. We're not willy-nilly taking this. We waited 2 hours for this thing to set up. Okay, we didn't take it and jump back in. Don't do that. We waited for it to tell us it was even going to work. Because, hey, I am up over $1,000. When I'm up over $1,000, I don't really want to give back anything, but I will do it if I think I have a decent chance to really chunk out more of my day and get a nice momentum move, which the stock was starting to prove itself it was going to do. You see? Which is why, once again, it's crazy for people to be buying these things climactic. The momentum was down. It had chances to rally. It couldn't do it. Look. I didn't even show this whole chart here because I wanted to show nice pictures of these, but it couldn't do it. The $200,000 is your buying power. It's not real cash. When you trade, you don't need $200,000 in real cash to trade. It's your buying power. Email me about that later and I'll explain it. You're using leverage to trade. That's how you're making the money. Leverage is an amazing thing if you know how to trade. If you don't know how to trade, it's dangerous. But when you get to the point where you know how to trade, leverage is your friend. You don't need $200,000 in cash to do this. Risk a little and earn a lot, a whole lot. This is the play number 2. This is a dream target. I put this out here. There's no way show you. If you wanted to do it, this is a possibility that exists. When I'm up a certain amount of money and I have such a great day in, I just, I take it. I just take it. Even when I get my second play, I take it. This worked. You would have had to have complete conviction to hold it through that rally, and you would have had to lower your stop, and I'm going to go over it. But if you held it to the next big target, you could have had an enormous day. The next target after that was $24, and then $23. It flew under the 24. And it started to bounce, and I'll show you where to take it out. But if you took the same play and held it through to the next target, it flushed right through 24. So you would have taken it on the bounce here, which was $23.37, and your profit on that same play where you risked $490 would have been $26,740. Same buying power as the whole play. You just got a bigger move out of it because you held it longer, and you would have made 54 times the amount of profit on the risk. And the total amount you would have made on the day is $11.25 plus $26,740, which is $27,865 on an initial risk of $195. Let's go back. Again, I would be out here. I would just be done. Okay, so that's me. I'm up a lot. I take it. I'm out. This worked, and if I had held through this thing, I would have lowered my stop down to here to make sure I wouldn't give them this back. When you get a bounce like this, though, you have no idea what it's going to do. Again, it showed the weakness, though, here. It really, really did. And you lower your stop down to here, and you get the next drop. The next target, it dropped through 24. It didn't even bounce to 24. It went down to 23-something. Once you get this drop into 12:30, which is the next reversal time, look, talk about precision. This is precision. This whole move started at noon. It was over by 12:30. It can't get any more perfect than that. This is another reversal time. And at that reversal time, it bounced. This is the whole move that it made on the day, and it bounced and pitted off here. You got to be out when it flips around and goes green at the next reversal time, which is 12:30, and it's already gone through your next target, which was 24. Again, you're not holding this to the next target, which is 23, just for 30 cents when you're up some crazy amount of money. Let's remember, when you start trading with size, and you have 7,000 shares of something, don't expect to get out of everything at exact price. You may have to piecemeal out of this thing, so make sure you get out. You don't want to be part of this bar and get shoot up. You want to get it, build it at a nice price, and get out. The whole point is, if you had taken this either play number 2, the first target, play number 2 at the dream target, you made a huge amount of money on the day. And it all started out risking only $195. And that's how you do it. In summary, you risked $195, and at the end of the day, you earned 83 times the amount you initially risked. 83 times. This is getting out at 25. And on the dream target, you earned 142 times. If you've got the guts to hold it to that, you really had a killer day. 142 times the amount of your initial risk. It all starts with a good gap. It all starts with a good gap. This opportunity exists in golden gaps, and this is what I teach in my class. You can risk a little and earn a lot, or a whole lot, and you do not need the cash value of these stocks to do this. You are trading with leverage. Whether it is day trading, whatever trading you're trading with leverage. And this is how you're going to build your account. You have to do this with precision. So how is this possible? Number one, you need the knowledge, which I can teach you from my class, from the Golden Gap course. And number two, you need conviction. You need conviction in yourself and the knowledge I can teach you. You have to believe in it, just like we were talking about at the beginning. And you need clarity, which the Golden Gap course provides when you learn how to read charts with precision and a clear head. When you start to really nail it down and read charts with precision, you're not going to be so buzzing in your head about the money. And lo and behold, the money is going to come. It leaps and bounds, and like I said, it's just going to start coming so quickly that you're not going to have any problem doing the right thing. You're not going to have any problem taking the second trade. You're not going to have any problem taking the size, and you're not going to have any problem booking it because you're up so much. Just be happy that you're up a lot of money and you did it. You need conviction. I must be clear that there is no such thing as real conviction or fake conviction. Someone recently had something online and said they were talking about how to get real conviction. I laughed out loud. There is no such thing as real conviction or fake conviction. There is do this? Well, you take the Golden Gap course that I teach. It teaches one strategy. You only need one strategy to make money. That's all that you do, and you put science to it, just like I showed you. That's it. That's all you need. This whole thing that I just showed you was one strategy of professional bearish gaps. That's it. And you need one play that you do well. I teach 6, but you only need 1. With 1, you can make money with size. With 1, you make money, you take a second play with size. And that's how you do it. You chunk it away. You chunk it away. You only need one play that you know well. You have to have at least one that you do well, because you've got to have the precision. Remember, that's how you're getting the tiny stop. That's how you're taking the first entry. That's how you're booking that money to take the next one. You need one play at least. I teach 6 in the Golden Gap course. And you need to start making money. There's no software necessarily to find gaps. I just find them online looking at earnings reports or on my platform, which has the top 20 stocks that are gapping up or down in the day. I just find them off there or on briefing or any subscription to any service you can find them. Paid or free, you can go online and do it. So you need to start making money. That is very important. Even if you got up tomorrow and said, I'm just going to make $150, just start getting green. If you've been trading and losing, I want you to start making money. Start getting into the habit of booking it. Booking it, booking it, booking it. You have to do that. Because the problem is people chase these crazy targets and they don't happen unless you've got a good gap. You can't get $2, $3, $4 moves in $25 stocks unless you've got a good gap. Things go to target when they work great. On a normal day, things usually don't go to target. Most of the day when you're trading, things make no sense. There's stuff that doesn't do a darn thing. Most stocks every day trade and they make no sense. They just wiggle and jiggle and they're in whatever trend they're playing at the moment, up or down or sideways. Gaps are different. That's why I love them. They have a precision about them. I'm able to get conviction because I'm looking at 26 things when I'm rating them, and they darn well better meet them. You need to believe in the person that is teaching you, and this is important because if you don't believe what I'm saying, it's going to be hard for you to learn from me. And when you take a class and you pay someone, you want to get your money's worth out of it. So it's important to believe in the person that's teaching you. You need to believe in the market, and you need to believe in yourself. I'll answer questions at the end, everybody. I see there's a couple out there. Let me get through this and I'll answer questions at the end. You need to believe in the market and the fact that you're able to make money doing this, trading. And what happens is you may be trading for a while and you may go back and forth and then you may start to lose conviction that it's even possible to make money trading. I'm here to tell you it is. It is possible to make money trading. So I want you to believe in the market and I want you to believe in yourself. How else are you going to get there if you don't believe in yourself? When everything was going wrong for me when I started trading, before I figured all this stuff out as well as I have a long time ago, I never gave up because I believed in myself. Even my friends got to a point where they were so tired of hearing me whine and complain about losing that they told me to quit, and I ignored them. And I kept going, and now I taught myself this thing that's unbelievable. It's incredible, and it worked. And I'm making money trading, and I believed in myself. I never stopped believing in myself. It is so important to believe in yourself. It's about persistence. If you have been putting off learning how to trade or learning how to trade properly, ask yourself why. The best job security comes from self-knowledge and self-empowerment. Make your own choices for your financial future. Don't let it up to someone else. I want you to empower yourself to do it. I love this. This is the picture of the world. It's just beautiful the way these colors match. I didn't even plan it that way. Just found this picture of the earth, and it's lovely. This is all about empowering you. If you want to take my class, I charge a fee for it. You're going to take the class. I'm going to teach you. I'm going to give you the knowledge in the class, and you're going to go out, and you're going to do it. You're going to do it yourself. I'm a vehicle for you to learn. You're going to empower yourself. How? With knowledge and education. That's the key. That is the key to being successful trading. There is no one magic button that you press in the morning. No. You have to learn how to rate the gap. You have to learn the points. You have to get up in the morning, whether it's 6, 7, 8 o'clock in the morning, and you have to do the work to rate them. Then you have to do the work to watch them. Then you have to do the work to figure out how much you're going to risk, where you're going to get in it. You learn that in the class, but you're the one that's pressing the buttons trading. So the Golden Gap system is a course. It is more than a course. It's a complete system. It is a system that gives you conviction specifically because it is precise and complete. And this conviction will help you to take size in your trades, which will allow you to make more money. That's how you're going to do it. That's how you're going to do it. You practice a small, you take one play, you take that money, you take a second play, you risk more, you risk some of the money from the first play, and then no matter what happens, you have a positive day. The more often you make money on a consistent basis, the more confidence you will build in yourself, and the more conviction you will have in your own ability to trade well. One of the most valuable things that you learn during the Golden Gap course is to have conviction in the Golden Gap strategy, and this conviction will help you produce positive results. If you learn how to risk a little and earn a lot, you will create positive results, and you will believe. There is no substitute for you doing it yourself. I can sit here all day long and tell you everything, but once you start doing it yourself, you will be amazed. It is going to change your whole trading world. You're going to start to realize that you can get where you need to be, and that's the last however many years you've been trying to learn how to trade were not wasted, because you still have the possibility of becoming successful doing this. Maybe it's not what you used to do. You're going to learn something new from me, something innovative, but it works. So again, I have a complete system. The first day of my class is I teach a 26-point rating system to find the best gap, and the whole second day is going over the plays and also talking about some other things that are important in trading, like having a wealth consciousness, money, confidence, perseverance, these things that are all around everything that I teach that are in the background. Why? Because they're important, and I know that people need to hear them. And when I was learning how to trade, no one told me these things. No one did, and I wish they would have. No one told me that I needed to empower myself. I hung on to other people's ideas like a crutch for the first couple of months, for the first year, until I said, you know what? Screw it. These people don't know what they're doing. I'm going to figure it out myself. Now, I've done it, and I'm going to teach you how to do it. But the main thing I learned through that process was the stuff that I was learning from other places was not precise. It was too generalized. You can't look at 2 things in the morning and pick a gap. You can't look at 3. You can't even look at 5. It's not enough information. And you can't take a tiny stop on everything that happens. You can't take every sell setup in the market. You can't take every buy setup. In fact, you can't even take every sell setup in a good gap. If you took every sell setup in that last gap, the one that moved, $4 on the day, you would have gotten stopped out a couple times, because between 10 a.m. and 12, it rallied and cushioned itself out before it set up at noon. And you would have gotten taken out in every sell setup in that 1-minute chart. On the 2-minute chart, you would have gotten stopped out. You can't take every one. There's a system to what I do. There's a reason for it. It's $1,500 for the 2-day class, and I allow people to retake it as many times as they need to get the information, because it is a lot of information in 2 days. It's from 9 a.m. to 5 p.m., and it's about results. It's about taking the money home, whether it's $500 or $1,000 or $5,000 or $15,000. When you end the day and you're green, it's a good feeling. We want to be like this guy. We want to go home with a bag of money that's so big we can barely carry it. That's the whole place that we want to be. This is the goal. So the class I teach is called the Golden Gap. And the next class I'm doing is October 20th and 21st. It's not this weekend, but it's next weekend on Saturday and Sunday. It's from 9 a.m. to 5 p.m., and the cost is $1,500. I'm also doing a class the following Sunday and Monday, if you cannot do a Saturday and Sunday, from 9 a.m. to 5 p.m., and the cost is $1,500. If you're interested, please contact me at melissa@theswkS.com, and you can call me at 652-799-5754. I teach the class live like I'm teaching you right now, and you ask questions and participate. And at the end of the day, we rate 3 gaps like you didn't know what happened. Thank you for watching. We rate 3 gaps like you didn't know what happened at the end of the first day on Saturday. So you get to practice. It's participation, going through to try to see if you can rate them. And then we look at the outcomes, so I don't show you what happens. We pretend that what happened. And you're doing that as if you didn't see what happened to practice this. And that's the first day, which is really, I've gotten a lot of feedback on that idea. I wanted to do that because I want people to make sure they understand how to put the information into practice. And then the second day is going over these entries and exits and how to know when to take these kinds of stops. If you can learn how to do this, you're going to make it. You're going to make it. Because you don't need $1 million to trade like this. You're trading with leverage, and you're going to build it and build it and build it and build it and build it. I'm also doing individual coaching now upon request. I'm charging $100 an hour, or I'll do $250. I'll do 3 hours for $250 if you want to do a package. If you're interested, you can please email me on that. If you want to talk about your trading plan, some strategy you have, I'm great at reading charts. You can email me if you're interested. And here's all my contact information. I hope you have fun and learned a lot. If you're interested, I was going to go over some live trades that happened today and yesterday. If anyone's interested, we're going to just go over to my trading room with Hotcom, my education room, and then I'll bring up my platform. If everybody's interested, we'll do that. If you have any questions, I can go over them now too. I know there were some questions here as well. Let me just go back and look. Futures, you can try what I have created on a different type of medium. I haven't done it. That's up to you. You can certainly find value in what I'm doing, and you could test it on that. I haven't done it. That's up to you. That's your choice.